I mean, it's a win-win for everybody. I mean, we're truly serving these people, making a difference. The
Yeah.
only complaint that I have received from my private lenders is they would say, Jay, why in the world didn't you tell me about this, long before you did?
Absolutely.
If you're a real estate investor and are wondering how to raise and leverage private money to make more profit on every deal, then you're in the right place. On Raising Private Money, we'll speak with new and seasoned investors to dissect their deals and extract the best tips and strategies to help you get the money, because the money comes first. Now here's your host, Jay Conner.
Our average profit is $78,000 per deal that we do. You don't have to do many deals when you're doing business like that.
Hello and welcome to the Real Estate Level Up podcast. Today we have a very special guest, my great friend and one of my mentors from 2014 actually, is when we first met. And he's been buying houses since, 2003, I believe, in a little town of 40,000 people, and averaging $78,000 profit per deal right now. So I don't know about you, but that's a guy I like to learn from. And done over $118 million of transactions, a national speaker, twice best-selling author, and a whole bunch of other cool stuff. Private Money Authority. That's where we met, actually, is you started helping me raise private money and learn how to do it the right way. And so within 90 days of learning it, Jay raised over $2 million, $2,150,000, and a whole bunch of other cool stuff. So Jay, tell us about yourself. Thank you for being here with us, brother.
Absolutely, Andrew. Thank you so much for inviting me along to talk about my favorite topic, and that is private money. And the reason it is my favorite topic is because there's no other strategy, there's no other way of doing business that has had this kind of impact to our business. I mean, Andrew, you and I know how to buy houses on terms. We know how to buy houses subject to the existing note. But it's been my experience that out here in the real world of doing real estate business, most of the buyers at the end of the day, or the beginning of the day, they're going to require all the money. They want all the cash. And so the beautiful thing about using private money and working with private lenders, and of course, we're not talking about institutional money. We're not talking about hard money lenders. But when you're doing business with individuals and you've got the cash available, ready to go and ready to close, then, you're just not going to miss out on any opportunities that come along on investing in real estate.
It opens up a whole new avenue. That's one thing that stuck out to me when I met you, because I wanted to have a terms business. I do have a terms business today. Most of the deals I do are on terms, except there's still a lot of deals that you are either going to have to pass over or pay cash for, and they're really great deals, and you can either leave them or, with your tools and strategies, learn how to scoop those up. So I know our listeners are going to get a lot out of that today. But starting off, tell us a little bit more about what your investing business looks like, where you are, and what you currently are doing.
Sure. So I'm here in Eastern North Carolina in a very, very small market. We only invest in 2 counties, or parts of 2 counties. Our total target market that we invest in has only got about 40,000 people. We only do 2 to 3 deals a month, but as you said a moment ago, our average profit is $78,000 per deal that we do. And so, you don't have to do many deals when you're doing business like that. And I don't say that at all to brag about what we're doing. The point I'm making is you don't have to be in a huge, large market to make significant income. In fact, there's a case to be made that when you're in a smaller market or you're investing in the outlying areas, you don't have all that competition that you do in the big cities. And I hear it all the time as I travel and I speak that, the competition is so fierce. Well, I say, maybe you want to think about going where the competition is not. right? Now, are there
Absolutely.
other real estate investors here in our market? Of course there are. But I don't know any other consistent day in and day out real estate investors here in our market that are doing the marketing, consistently to where we have seller leads that are coming in every day. And I tell people all the time, unless you have got consistent leads coming in from potential motivated sellers, then you're really operating in a hobby and you're not operating in a business.
That is very important. That's the differentiator between doing a business making, as you do, 6 figures a month, or whether it's a hobby and you do a deal on the side and say, hey, I got some extra vacation money for the year. And that is the make or break.
And there's nothing wrong with having a hobby. I mean, if you want to have a hobby, have a hobby. But the important thing to know is realize what you're doing.
Absolutely.
Right? At least be aware as to whether you're running a business or a hobby. And what does it take to have a successful business?
So how did you come to get involved originally? I love this story. We've been friends now for many years, and I've heard you tell this story. So tell everyone how you got involved in private money in the first place.
Well, I can tell you how I did not get involved. I just didn't wake up one morning and say, hey, I think I'll go raise me some private money. In fact, I never heard of private money. I never heard of self-directed IRAs and that whole world until January of 2009. I started investing in single family houses here in Eastern North Carolina in 2003. So the first 6 years, all I knew to do was rely on the local bank to fund my deals. I didn't know anything about the terms business. I didn't know anything about subject to. I didn't know anything about seller finance. And I never even heard the word wholesaling. I didn't even know what wholesaling was. All I knew is that you go find, negotiate a deal, and you get the local bank to fund, that investment. Well, that worked out fantastic for 6 years. But then in January 2009, I actually picked up my telephone. Andrew, I know you'll find it hard to believe, but here in Eastern North Carolina, we actually still have handsets and we have cords that are attached. I know a lot of your viewers and listeners don't even know what this is, right?
Does it have the round rotary dial on it, Jay?
No, it's actually just push button, believe it or not. But anyway, I picked up this exact telephone handset. I called my banker in January of 2009, and I told him about a couple of deals that I had under contract to invest in. And I learned very, very quickly during that conversation that I'd lost my line of credit. Nothing on my part. I mean, I'd had a great credit score, had a great relationship, making payments on time on deals for 6 years. But when my banker told me that my line of credit had been shut down, I said, what are you saying? Why in the world are you shut down? And my banker's name at the time, his name was Steve. I said, Steve, why are you doing this? He says, Jay, don't you know there's a global financial crisis going on right now? And I said, no, but now I got a financial crisis going on because I got these 2 deals under contract and no way to fund them. So my definition of coincidence is God's way of staying anonymous.
That's
and
good.
So in less than 2 weeks, I learned about private money, private lending, and how that works. So what I did is I put my program together. In other words, when I say I put my program together, what I mean by that is I decided what I was going to offer people as far as interest rates, what the length of the note was going to be. And, the thing that I learned so quickly about this world of private money is that it's a 180-degree shift from the way you traditionally borrow money. Traditionally, you go to the bank, you get on your hands and knees, and you put your hands underneath your chin, and you look at Miss Banker or Mr. Banker, and you say, please fund my deal. Please fund my deal, right? Well, in this world of private money, I've never asked anybody for money. I've never pitched a deal. And people ask me all the time, they say, Jay, how in the world do you have all this private money and you've never asked anybody for a deal? I don't ask anybody for money, rather. And well, the answer is I put on my teacher hat, you see here. I put on my teacher hat, my private money teacher hat, And I started, and I still do, teaching people what private money is, how they can earn, how individuals can earn high rates of return safely and securely.
And your hair still looks perfect.
Of course.
I like that.
That's because I got hurricane hairspray. What are you talking about? So anyway, the thing of it is I'll hear real estate investors that have never raised private money. They'll talk about this fear of rejection, right? They fear they're going to be rejected when they go to ask people for money. Well, here's the question. How in the world can you be rejected when you're not asking anybody for anything? I'm not asking anybody for anything. I'm got on my teacher hat. Here's the interesting thing. I got 47 private lenders, and none of them ever heard anything about private money, private lending, or self-directed IRAs, how they can use their retirement funds to invest in real estate or loan or be a private lender. They never heard any of that. And so I teach them my program, and it's about a 20-minute conversation to teach how the program works. When I teach it to them, all I do is shut up. I don't have to ask, do you want to get involved or anything like that? They automatically say, well, how do I get involved? And by the way, they don't write us any checks, right? They just tell us how much they have to work with. Is it investment capital? Is it retirement funds? And if it is retirement funds, of course, I'm going to introduce them to the self-directed IRA company that I recommend. And so it's like, I got on my teacher hat, I'm teaching them. And so as a result of taking that approach, they're chasing me and I'm not chasing them. In fact, in this market, I've got more private money chasing me than ever before. In fact, I got a big problem. I can't even put all the money to work that I've got pledged to me.
That's a good problem to have. And I want to point out something you said, and it's amazing. And I know you got a free gift for everybody at the end as well. So that's exciting. And I have a signed version of the free gift you're going to give out. So thank you for that. But something you said is you've never pitched a deal. You've never asked for money. And that's such a total opposite shift from what most people coming into this world think. It's what I thought when I started. Like, well, how am I going to get private money without asking? Or how am I? And so to be able to just attract it, and I know you talk a lot about that, and we'll get to more of that. That was two huge takeaways that I remember when I first met you that rocked my world. Was, wait a second, there's a different way to do this, and it works way better. So what's some of the advantages when it comes to private money?
Well, the list is very long. So I'm going to talk about the advantages of using private money in contrast to borrowing what we call institutional money, say from hard money lenders or, banks or, anything like that. By the way, nothing against hard money lenders. I've got some of my best friends are hard money lenders that actually use my strategies to raise money for their hard money lending fund that they lend out to real estate investors. But what are some of the advantages? Well, the biggest advantage is that it puts you as the borrower, it puts you as the real estate entrepreneur in the driver's seat of your company. In other words, it puts you in the driver's seat because you, as the borrower, you make the rules. Wow. Isn't that a change, right? You set the interest rate. You set the length of the note. You set the loan to value. You set the frequency of payments. Converse to that, borrowing traditionally, the lender typically makes the rules. But in this program, we make the rules. So instead of asking for a mortgage or asking to borrow money, you're offering a mortgage, right? Which is very, very different. There's no asking, you're offering. And so what are the advantages? You make the rules, you set the interest rate, you set the length of the note, putting you in the driver's seat. Part of the program is that we don't borrow typically when there's a rehab involved. We don't borrow typically more than 75% of the after repaired value. I didn't say 75% of the purchase price. I said 75% of the after repaired value. Well, when you buy a deeply discounted property or a house, let's say you got a $200,000 after repaired value house. Well, if you borrow 75% of the after repaired value, you can borrow 150,000. But guess what? I buy houses all the time that need renovation. I'll buy them at 50% of the after repaired value. Well, I get all the money loaned up front when I purchase. Well, if I'm buying it for 100,000, I can borrow 150,000 because that's 75% of the 200,000. Guess what? I'm bringing home a $50,000 check, less than closing cost, when I buy the property. I mean, who wants to get paid to buy properties, right? So I love the phrase. Yeah, you do, Andrew. I mean,
Absolutely.
I love the phrase on my real estate attorney's check stub. It says excess cash to close. And I love me some excess cash. So that's another big advantage. Every private lender loan that I do actually is a no down payment proposition or deal. I'm not taking any of my money to the closing. What's another advantage? You can structure the deals to where you're not making any monthly payments. You can just let the interest accrue if you're doing a renovation and a flip. Now, stop and think about that. How much do you think this is going to fix your cash flow? You take no money to the closing table. You bring home a big check when you buy, and you make no payments until you cash out. You think that'll help your cash flow? Absolutely. In addition to that, what are the other advantages? No credit check. Your credit score's got nothing to do with how much private money you can get. No verification of income, right? So your credit score, your verification of income's got nothing to do with it. And another big advantage is closing quickly. So I make offers to where I'll close within 7 days. Well, you know, if you're borrowing institutional money, quite frankly, I'm surprised anything ever closes. I mean, what do they do with the verification of income that they lost 3 times? I don't know, but I'm able to close quickly. Well, I actually get more offers accepted because I'm able to close quickly. I'll actually buy a house. I mean, talk about putting you in the driver's seat. I've recently bought 3 houses in the past couple of months where the sellers didn't want to sell for a few months down the road. Guess what? We went ahead and closed on it, got them their money, and I'm letting them live rent free, right, until they move out. Well, the reason I want to go ahead and close now and close quickly using private money is because time kills deals. The more time that goes by between you're talking with a seller or negotiating with a seller and actually closing on the deal, the less likely that deal is even going to happen. So the bottom line is it really, really puts you in control of your business.
That's an excellent point, and something that really stands out about the private money and the way you do it, Jay, is I get that question all the time from people. They go, well, how much do you have to bring to closing? How much down do you have to put with a private lender? Everything you just said solves every challenge a real estate investor has, as long as they have the right knowledge, of course, to do the deal. You just solved every money challenge they had. And
yeah, absolutely. And you know what goes along with that? When I say I've never asked for money, well, here's an example of that. Using private money, there's no application, right? There's no application process. You're already approved, right? There's no approval process from the lender, because then again, you're offering this mortgage to them. And now here's another example, Andrew, as to how we never ask for money. They say, well, Jay, okay, I understand. You're teaching the program. You're not asking for money. They tell you how much they got to work with. But now you got a deal. How in the world are you going to get your deal funded without, quote unquote, pitching the deal? Well, it's real simple. I pick up that handset again with the cord attached to it, and I call up the private lender with what I call the good news phone call. Well, what in the world is the good news phone call? Well, here's the exact script. I call them up. I say, I've got great news for you. I can now put your money to work. Now, by the way, when I call them up with the good news phone call, they're already sitting by the phone waiting for the phone call, because I've already taught them the program. They've already told me how much they've got to work with. I mean, by the way, Andrew, I tell you something that just drives me flipping crazy. And I know you've heard it, but I've heard some educators out there say, just get the deal under contract. The money will show up. And I want to go, where? Where is the money going to show up? Is it just like going to rain out of clouds? And I've heard people say, oh, money chases deals. Money follows deals. And I just want to throw up, right? It's like, come on, folks. I mean, think about how much more confident and how many more offers you're going to make when you've got the money burning a hole in your pocket. Back to my example. So an example of how we don't ask for money and we don't pitch deals, we call up the private lender. They've already told us how much they've got to work with, or if they've got retirement funds, they've moved their retirement funds or a portion of them over to the self-directed IRA company. Well, they're not earning any money until they put that money to work, and they are counting on you, the real estate investor that told them about this. They're counting on you to put their money to work. So they're waiting for the phone call. So I call them up with the good news phone call. I say, I got great news. I can now put your money to work. And I tell them 4 things about the deal. And quite frankly, this is more than they even want to know. But I'll tell them 4 things about the deal. I said, look, I got a house over in Newport. I don't tell them the physical address. They could care less what that is. It's got an after repaired value of $200,000. The funding required is $150,000. Now let's stop right there. I know they got $150,000 because they already told me. They've been waiting on the phone call. And notice the $150,000 is 75% of the after repaired value. So I'll say, hey, I got great news. I can now put your money to work for you. I got a house in Newport under contract to purchase. It's got an after repaired value of $200,000. The funding required for the deal is $150,000. Closing is next Wednesday, so you'll need to have your funds wired to my closing attorney by next Tuesday. End of conversation. I didn't ask them if they wanted to do the deal. Of course they want to do the deal. They've been waiting for the phone call. And if I ask them if they want to do the deal, that's the most stupid question in the world I could ask them. Of course they want to do the deal. I'm not going to bring them a deal unless it matches the program that I already taught them about when I had my teacher hat on, right? And I was teaching them the program. So I call them up with the deal, matches the program, and they're ready to go.
That's a huge takeaway. And backing up, of course, I had to laugh when you said, you made me feel slightly hypocritical, because I've said before, if you get a good enough deal, the money will be there. But I didn't say that till after I had money lined up. So I felt like a hypocrite. And so I had to laugh uncomfortably when you said that. But secondly, it's a really good point. And I think this is where I got hung up. And I think this is where a lot of people get hung up, is thinking, oh, I need to go tell them, because that's what we're all programmed when we, quote, borrow money. I need to go beg this person to please loan me $150,000 on this house and give them the street name. And if I can convince them there's enough profit, maybe they'll fund it. And what you just said flips the whole script on its head. And that's how you've been raising money for many years. And that's how I've been raising money since meeting you, is learning to do exactly that. Sell the program, not the property. That's
well,
amazing.
And Andrew, I remember way back when you came to one of my private money events, I remember you saying one of your big takeaways was what ties in with this, not asking for money, is you're actually serving these people. You're actually serving these private lenders that they don't even know what private money is until you tell them about it. But, I'm sure you've experienced the same thing. Carol Joy and I have as well. We have received verbal, in-person, and handwritten notes from some of our private lenders talking about how we have changed and just transformed their retirement years to where they could not have traveled and done some of the stuff they've done.
Isn't that a good feeling?
Yeah. I mean, it's a win-win for everybody. I mean, we're truly serving these people, making a difference. The only complaint that I have received from my private lenders is they would say, Jay, why in the world didn't you tell me about this, long before you did?
Absolutely. And I think that's very important takeaway. And when I started, after meeting you and starting to raise private money and do it your way, that was one of the biggest breakthroughs for me that convinced me that everything you was saying, I believed you, but when it became my reality was when I started getting those notes and the phone calls, just the thank yous. That's amazing. So maybe somebody's listening to this going, but why would anybody loan me money? What do you say to them?
Well, that's a common question I get, particularly from new real estate investors. They'll say, why in the world would somebody loan me money? And I've never done a deal, right? Why would they loan me money? And here's the answer. If you, as the borrower, do not pay the private lender, the property does. That's why we're not borrowing unsecured funds. Can you borrow unsecured funds? Yes, you can legally, but don't do it. Back that promissory note, buy the real estate that you are purchasing. And so now you're going to be giving your lender either a mortgage or deed of trust. It's the same thing, just it's called a different thing based on the state that you're in, but it collateralizes the note. And another way that you're going to protect your private lender is back to that maximum loan to value of 75% of the after repaired value. So if you don't pay them, they've got the legal right and they've got that property that they would actually own. And quite frankly, they would make more money doing that than the interest that you'd be paying them. Now, of course, no private lender is going to want the property. They don't want the property. That's why they're passive. They want you to do it. But that is their protection just in case.
That's good protection. And it definitely is a way that everybody wins. Another question I wanted to ask you is, what do you say to potential private lenders? This is a question I get a lot.
So like if I'm just like introducing this concept and this world of private money, how do you start a conversation?
Exactly.
I love did you know questions. Did you know questions? They're like curiosity questions. So I can just be like in a casual conversation with a friend or, at a networking event or whatever. And one of my favorite did you know questions is, did you know there's a way that people can actually earn unlimited money per year tax-free? Well, they're not going to know the answer to that question, but you got their attention when you said unlimited money tax-free. Well, the answer to that question is, of course, you got to be familiar with self-directed IRAs. And so my follow-up question to that, first, I start the conversation with, or I start the topic of conversation with, did you know there's a way people can earn unlimited money per year tax-free? Of course, they're going to say no. And then I'll say, well, have you ever heard of self-directed IRAs? And in all likelihood, even a financial planner is going to say no, they never heard of it. And so now this opens up a way for me to have a conversation about self-directed IRAs. And so now, and of course, the specific answer to that question is when someone opens or has a Roth IRA, self-directed IRA, they can invest that money, and a Roth IRA is opened up with after-tax dollars. So whatever the return is on that Roth IRA is already tax-free. But even if they have just traditional retirement funds, it's at least going to be tax-deferred. So I love that way in starting. Another way, how do you start conversations on private money? I like starting conversations by saying, by the way, are you investing in anything these days? Like, are you in the stock market? Are you into crypto? You invest in anything? And regardless of their answer, particularly if it's the stock market, my next question is, well, how's that working out for you in this market? Well, you know what that answer is, right? Because the stock market is so volatile. And so that opens up a door to now talk about the private lending program.
I love that. And the did you know questions, that's a writer downer, because that goes back to not asking for money. You're just putting on your teacher hat. And I'm still amazed that your hair looks the same after you put that on 4 times. What kind of documents or documentation do you need, and how do you close these? So you've got the deal, you've got the person who is you're going to be a private lender. What's next?
Yeah. So actually, before we're actually raising private money and having a deal to close, the worst time to be looking for private money is when you need it for a deal, right? That's why I teach and practice the money comes first. Well, that's the same. It goes the same for your team members. Your real estate attorney, the worst time to be looking for a real estate attorney is when you need one to close a deal. So you want to establish a relationship and have your relationship in place with your real estate attorney that can draw up your documents. So you got a deal under contract. You got your private lender lined up, ready to go. So what happens next? Well, what happens next is for your real estate attorney, not you or somebody in your office, but for your real estate attorney to draft the closing documents. Well, there's only a couple of documents. There's the promissory note, which is going to lay out who's the borrower, that's your private lender. Who's the lender, that's your private lender. Who's the borrower, that's your entity, your land trust or your LLC or whatever entity that you're investing in. The promissory note, of course, is going to lay out what's the interest rate, the frequency of payments, right? So it's a very, very short document. And then you have either the mortgage or the deed of trust, which is going to collateralize the promissory note. And then you have a HUD settlement statement. Well, the only documents that the private lender is going to get is the original promissory note. By the way, there's nothing for the private lender to sign. They approved the deal when they wired the funds to your closing agent, right? So they're not promising anything. You're doing all the promising. They wire the funds into your closing agent's trust account. You sign the promissory note that your attorney drew up. You sign the deed of trust that your attorney drew up. And then outside of closing, we also have the insurance policy. So the insurance policy is going to name your private lender as the mortgagee on that insurance policy. That gives them an additional layer of protection. So if you ever file a claim on that property, the check is actually made payable to the lender, private lender, and to your entity as well. And I'm going to name them on the title policy as an additional insured. So very, very few documents are used for a closing with a private lender. In fact, I have given my real estate attorney, since I travel so much, I've given my real estate attorney power of attorney. My real estate attorney can buy and sell any property I've got with just an email authorization. But if I happen to be in town and go to the closing, literally the closing is less than 5 minutes when you're doing a private money deal.
I like that. And that was one of the amazing things to me coming from, I remember starting out trying to get a loan through Quicken Loans. And after they had lost my income verification for the third time, I was blown away. I was shocked when I started duplicating your model because it just was so simple. It was really unbelievably simple, and everyone's protected, and that's what I love about it. So what did your business look like prior to finding private money? And how did your profit change after?
Well, what my business looked like prior to private money is I was playing by everybody else's rules, and I had to get appraisals. That's another benefit. There's no appraisals involved as required by the lender. So I didn't get as many offers accepted because I couldn't close quick enough. I actually had to turn down some opportunities because I was maxed out on my line of credit. That's another big benefit. In this world of private money, there's no limit to the number of private lenders you can have. There's no limit to the amount of private money you can have available to you. So again, you're playing by your rules and not by everybody else's rules. So what looks different? I do more deals and more profitable deals.
That's awesome. I like more deals and I like more profit.
I don't know who said less is more. That don't even make sense. I say more is more.
That makes more sense. Now, something I get a lot of, and I got some questions listed down here that I'm reading off of my beautiful MacBook. Normally I just go with the flow, but there was some very specific things I want to cover because every time that we hang out and you've been on, various of my trainings, or I've been on your podcast and other things. You just give so much value, and you answer so many questions that I get a lot. And I appreciate, again, so much you spending this time with us today. Another question I get a lot is, I talked to a private money lender, and they wanted 20% down and 12% interest. And I said, that wasn't a private money lender. So explain to us the difference between hard money and private money.
Yeah. So typically a hard money lender is usually a broker of money. Typically a hard money lender is not loaning out their own money, right? Typically. So typically a hard money lender is an institution, it's institutional money, that goes out and raises money for their fund, their hard money lending fund. Then they turn around and they loan the money out at a higher interest rate than the amount that they're borrowing at. They're going to charge origination fees or points. So when you're doing business with an individual, there are no origination fees, there are no points. They are making the rules, so they're typically not going to loan you more than 65 to 80% of the purchase price. You got to come up with the difference. But then they may loan you 100% of the rehab, but you still had to do a down payment. The length of the note is typically, with a hard money lender, going to be either 6 months, 9 months. They will do extensions, but guess what? If they do an extension, they want this thing called extension fees. Well, in this world of private money, there are no extension fees. They don't want the money back. They just want you to keep the money if you can and keep putting it to work. So again, hard money, interest rates are much higher. Right now, I'm paying my private money lenders, and I have for years. Even in this market of higher interest rates, I'm still paying my private money lenders 8%. I got a phone call and an email yesterday from one of my hard money lenders. Right now, they're at 12% and 3 points. I got another friend in a mastermind that I'm in. He's charging 15% and 3 points right now. So that's hard money. But here in the world of private money, since you're making the rules as the borrower, we're paying a straight 8% and no fees, no extension. No origination fees, no extension fees, straight 8%.
And that's a very important differentiator, is that you set the rules. Whatever you and your private lender agree to is what happens. And for you, that's 8 on a first, 10 on a second. And I love that because it keeps everything so simple. And if you're newer and starting out, I've had people come to me and say, well, is it okay to offer more in the beginning? I said, yes, if you want to, and it's only your lack of confidence that's causing you to do that. Because quite frankly, there is plenty of money. What is the amount of private money floating around right now?
Well, prior to COVID, there was $18 trillion that was just sitting in people's retirement accounts for cash, sitting in certificates of deposit that could be used, for private money.
Did
and
you
a
say
couple of months ago, I checked it out.
18 trillion.
Yeah, with a T. That was before COVID. But now on this side of COVID, $31 trillion, can you imagine, in cash? That's even more than the federal budget.
I was going to say, and the government hasn't confiscated it to pay off the debt, thank God.
But yeah, there's money all around us.
Wow.
And, all you got to do as a real estate entrepreneur and investor is get the word out that you got this program to pay these high rates of return safely and securely to individuals.
So one more question before we wrap up today, and thank you again so much. I know due to our errors on the internet and whatever the heck was going on, we've spent extra time here today, and I just so appreciate you spending it with us. If you were starting over from scratch, what would you do differently in your business and why?
Well, I would not have started out this business without a mentor or coach. I'll tell you that. My first 6 years, I made so many mistakes. The only education that I was using was experience from the mobile home business, which does not translate to this business. And I was reading some books. But if I had it all to do over again, I would not have waited 6 years into it before I actually started working with somebody that had already blazed a trail and already, knew what to watch out for. They'd already gone through the minefield. So my advice is, don't start out the way I did. Start working with someone that can be your mentor, be your coach, hold your hand as you are on this pathway to a new career.
That's some good advice. I am grateful that I found a great mentor in the beginning, you being one of them. And thank you again so much. I just want you to know and to remind you of back in April of 2014 when I met you. At the same time I met our friend and mentor, Ron LeGrand. It was a very pivotal point in my life, and I'm so grateful that you were there and of everything you've taught me. Well, I know you have a free gift for everyone, so anything else you want to share before we give them the beautiful free gift you have?
Hey, I'm ready to give this gift away, Andrew.
Let's do it.
And that is, yes. So I'm so excited about my book, which is called Where to Get the Money Now. And by the way, this is not an ebook. You can't download it. I actually have to put it in the mail and mail to you. And believe it or not, the post office actually is still open. So I will mail this to you in a priority envelope. You'll receive it in 3 days or less. Where to Get the Money Now, subtitle, How and Where to Get Money for Your Real Estate Deals Without Relying on Traditional or Hard Money Lenders. And it's $20 at Amazon, but it's actually free here on Andrew's show. Just pay a couple of bucks for shipping and we'll send it to you. You can get the book at www.jconner, and I'm an ER, not an OR. So go to JAYCONNER.com/book, BOOK. So that's jconner, JAYCONNER.com/book, and we'll rush it right out to you.
That's an amazing give. When you got me my copy, I read through it, and wow, what an amazing power pack book that is. And thank you again so much for that amazing gift for all of our listeners. Thank you again for being with us, Jay. It's always good seeing your smiling face, and I'll see you again very soon.
Thank you so much, Andrew, for having me. See you soon.
Bye for now. Thanks so much for watching. And if you like that video, hit the like and subscribe button so you don't miss any more. Comment below what you got out of it. It'll help with the algorithm so we can continue to spread incredible information to awesome entrepreneurs just like you and spread the message. Thanks for all the support.
Are you feeling inspired by the knowledge you gained in this episode? Then head over to jconner.com/moneyguide. That's JCONNER.com/moneyguide. And download your free guide that shares 7 reasons why private money will skyrocket your real estate investing business right now. Again, that's jconner.com/moneyguide to get your free guide. We'll see you next time on Raising Private Money with Jay Conner.